So here's the question. What's better for your portfolio? Having a small amount of your money in Bitcoin or having a small amount of your money in gold? Stick around. I'm going to tell you which one is probably best for you, regardless of how old you are. All right, stick around. Hey guys, this is RC Peck with Fearless Wealth, and I want to talk to you about Bitcoin versus gold. And I want to come at it with a very specific approach here because there's many different ways we can look at this. Which one should you trade? Which one should you own for the next year? Which one should you do something else with? So I want to talk about the something else with, and that is putting a smaller portion of your total portfolio in this investment. And we're going to go with 5%. Now, whether you ever buy Bitcoin or not, or gold or not, or whether you're 70 years old or 30 years old, this video is going to help you because it's going to help you sharpen your thought process and the questions you ask about how to really construct a portfolio that makes you richer over time without trauma, without drama, having it really manage itself. Okay, so let's start. So here's the foundation. I want to put 5% of my money in Bitcoin, or I want to put 5% of my money in gold. Which is the best for long-term growth appreciation, right? So I'm framing the question specifically, not hyper specifically, but just so you can be clear about what we're doing. So I'll give you the punchline. The punchline is you want to have it be 5% in Bitcoin. How you buy it, where you store it, that's a conversation for a separate day. Let's just do one question at a time. Now let's talk about why Bitcoin over gold. So when you think about why people owned gold in the past, it was either because when they left their country, they wanted to take their wealth with them around their neck or in their earrings, or it was a store of value, and an ounce of gold is worth the same in Nigeria as it is in Russia, as it is in the US. So it holds its value, it's transferable. You can split an ounce of gold in a half an ounce, right? People see that ounce of gold the same all over the planet. This is all true. Everything that's true for gold as an investment vehicle is also true for Bitcoin, but Bitcoin's even better, right? You could have $1 billion on basically something the size of a thumb drive, and you could cross the border, right? So it has everything gold has, but better. Now, I know some people want to hold gold in their hand, or they want to store it in their vault. That's fine. You can do the same thing with Bitcoin on a wallet, right? You could put that wallet. I know these are new terms for some people, but you could put that in your safe. So unless you absolutely have to, and I don't believe people do, have to physically have gold in your presence, because the world has moved to a digital world, Bitcoin's going to grow your portfolio better over time. Now, maybe not in 30 years. One of the things I think about is today, and I don't want to date this or timestamp this video too much, but Bitcoin has a ways to go to get to the same market cap as gold. That's fine if you watch this in 10 years. Today, Bitcoin's about a $1 trillion market cap. Gold, the metal today, is about a $9 trillion market cap. So for Bitcoin to get on the same level of gold, right, Bitcoin would have to go up another 10 times in price. And it's already doing that, and it's already that's going to happen. Whether it takes 5 years or 10 years or 2 weeks, it won't be 2 weeks. It's moving that direction. But Bitcoin is transferable easier. Over the next 5 or 10 years, it's going to give you that bigger upside. Now, here's the thing. So the first answer is why Bitcoin over gold. Now, here's the second thing. When I said 5%, there's two ways to hold that 5%. Right? You can either put 5% of your money, if you have $1 million portfolio, that means you put $50,000 either into gold or Bitcoin. Here's how to own it. Owning the investment's not the strategy. How you own it is the strategy. So there's two ways of owning this 5% store value, or some people call it like disaster insurance. Now the assumption they're making is gold doesn't fall if the market falls 50%, which, by the way, gold does fall when the market falls. So don't think that if the stock market falls, gold goes up. When stuff is getting very real and very scary, everything goes to one, meaning all things are correlated that people want to get out of. So don't think that gold goes up when the stock market goes down. But what you want to think about is how you own that investment, right? So this is the second point I'm talking to you about. One idea is every year you just rebalance the 5%, right? So if your portfolio the first year is $1 million and let's just say over 1 year, then the portfolio is $2 million. Then at the end of the second year, right, or the end of the first year, you make sure that 5% still represents your portfolio. But in this case, it would be $100,000. So this idea is that you rebalance it once a year back to the 5%. The second kind of way of doing how you own it is just saying, look, I got $1 million portfolio, I got a $100,000 portfolio, anything in between, above or below, and today I'm putting 5% in, I'm just gonna forget about it. And in 10 years, if that 5% becomes 35%, then that has made my life a lot more stable. Obviously, having a third of your money in one investment kind of changes the volatility of that portfolio. That is another topic for another conversation, for another video. But the idea is that you have two choices. You either do an annual rebalance or you just buy and forget about it. If you want to know the best rebalancing range, it's actually never. All the research that's been done on rebalancing is the best thing for portfolio growth is to not rebalance. Now, it depends on what you actually own, because if you own some pretty bad things, it's only going to hurt your portfolio over time. That research was done on stocks versus bonds, so I want to be clear about that. Okay, so the first point was, yes, Bitcoin over gold. Okay, the second point is how you own the investment. Either rebalance once a year, or just put the 5% and just forget about it, okay? The third is the emotional part. So part of having a strategy is how you're going to handle it emotionally, right? So gold has not been the least volatile investment, and Bitcoin certainly hasn't been the least volatile. I'm hoping by me saying 5%, right? It kind of says to you, look, if my 5% of my portfolio goes to 2.5%, it's not changing the course of my future. So from an emotional point of view, it's really understanding the strategy that owns the investment that's going to help you, right? Because if I say to you, I believe Bitcoin is the better investment over gold, or Bitcoin has replaced gold, but emotionally, if Bitcoin gets cut in half and you freak out and you sell, that's not going to really help your portfolio. So this third part is really understanding emotionally what it means to have 5% of your portfolio in something, and whether that's a buy and forget or whether it's a annual rebalancing. But the net of the video is that things are changing, things have changed. And whether you're over 50 or under 50, that new gold is Bitcoin, right? Now, notice I did not once say crypto versus precious metals. I said specifically Bitcoin and specifically gold. And that's actually what I'm talking about. Crypto is going to do something very different over time. Think of crypto like internet stocks, right? Nothing new was invented with the internet from the standpoint of an investment. They were still companies. They were still publicly traded companies. They still did retail sales. They still did services, but there was a slant to it. It was done online. The same thing's happening with crypto. Certain cryptos have a utility. Certain cryptos have a store of value. So they're all going to do something slightly different. That's not what we're talking about here. I'm simply saying that we're looking at Bitcoin versus gold, as I believe Bitcoin will be the gold of cryptocurrencies. Thanks, guys, for being in my world. I appreciate you watching this. Please hit the like button. It makes a difference to YouTube. I never hit the like button in the past before I really started doing videos, nor did I ever leave a comment. I read all the comments. I reply to them. Let me know what you're thinking. Where did I get it right? Where did I get it wrong? What am I completely missing, right? What's in my blind spot? And if you like this video, you're going to love my free course, Clarity and Control, which literally shows you, it's totally free course, how to get clarity and control back over your portfolio. Okay, thanks everyone for being in my world, and I'll see you on the next video. Okay, bye.